of CFO. A warm welcome to you, sir. It is my privilege, myself, Mrs. Nagalakshmi, Head Department of Commerce and Pius 10 Degree and PG College for Women, on behalf of our college and St. Anne's College, Mehdipatnam, we extend a very warm welcome to you, sir, for this wonderful session where we are collaborating to connect industrialists and expertise with the faculty members towards the enrichment journey. So kindly accept warm green greetings from our behalf. We welcome you, sir.
Thank you, ma'am. Thanks a lot.
Great persons keep their profile very.
Ma'am, your screen was not visible.
My screen, ma'am?
Yeah, you had actually been welcoming, sir. So I was looking forward for the screen.
Yeah.
And sir's profile with his photograph.
Yes, ma'am. I'm sharing my screen.
It's not visible, ma'am.
I'll just check up again, ma'am.
It's okay. Towards the end, maybe if I can check back. Okay, so warm welcome to Manikanta Simon.
Ma'am, can you see it now?
No, ma'am.
I started my share screening. Ma'am, is it okay now? I think it is visible.
Yes.
Yeah. So sorry for that little technical glitch. So there was a warm greetings to welcome you with a floral greetings from our side. Just excuse me, sir. So this. Yeah. So we welcome you again, sir. So with your rich profiles, we feel privileged to extend floral greetings to you, sir, to start the day, to start the evening. And great people keep their profile very brief. So I'm very much honored and privileged to present Simon Kanta, sir. Sir is a CMA, ACCA, CSCA, and deep IFRS, AFA, MIPA Australia, MCOM, MBA. It is just a bouquet of the qualifications that are in front of me. Sir is a founder, ACCA trainer, CMA coach, deep IFRS instructor too. What attracted me in your profile was be mentioning that sir is an all-time student favorite for his conceptual lectures that are fun-filled and consistently of abundant real-life examples and case studies. Expecting that there will be some takeaway for all of us for the session that you will be sharing with us, sir. I take this privilege to invite you to take over the session on the topic, the changing scope of audit. So over to you, sir. And I request all the participants to be having a very good session. Enjoy your session. Share your queries in the chat box. We'll be having an interactive session at the end. So over to you, sir. Thank you.
Thank you, ma'am. Good evening, everyone. And thank you to Anuradha ma'am and the entire faculty team here, and for giving me the privilege of connecting with you all. And also thank you, Lakshmi ma'am, for that wonderful introduction. It's always great privilege to interact and communicate with other fellow faculties. So let me quickly share my screen. I believe that should be done. And yeah, can someone just confirm if the screen has been shared or not? I have some things up.
Yes, sir, your screen, your presentation is visible. Thank you.
All right. So without any delay. So today we'll be discussing on this particular topic that has been selected for us, which is changing scope of audit and certain current issues that we are having. I believe the last session was on Indian accounting standards and the recent changes that have been there in the IND-AS adoption from IFRS, shifting from the older standards to new IND-AS. All those topics have been dealt for you, I believe. Can we keep this interactive, like the chat section, or maybe the chat section would be much more organized, I believe.
Sir, in whichever way you want the interaction, because it will be a disturbance every time the participants unmute and keep interrupting you. So
Yes,
if you're okay with that, we can take all the questions at the end of your session.
Perfect.
Thank
So
you,
in
sir.
case if I'm asking for something like,
Yeah, sure,
was this
sir.
the one that is done yesterday, someone can confirm in the chat section.
Manikanta sir, you are in mute.
Okay, cool. I guess now you can hear me, right?
Yeah.
Yeah, thank you. So continuing from yesterday's discussion, as Lakshmi ma'am was rightly saying earlier, so audit starts where financial reporting ends. So the first point that I want to highlight here is most of us are only focused on accounting rather than focusing on the financial reporting part. Because if you see, our entire focus would be initially on recording the transactions, gathering the data, updating the ledgers, appropriate ledgers, balancing them out, carrying the balancing figures and putting them to the trial balance, making sure the total of debits and credits are tallied. So this entire process is just the initialization of accounting. From here onwards, the actual financial report starts, which are presented to the users, basically the shareholders, bankers, money lenders, whoever it is. So the financial reporting starts where accounting ends. Then auditing starts when the financial reporting ends, which is a very procedural flow that we go ahead. So considering the fact that the previous session was on IND-AS and financial reports, it would be much more comfortable for me as well as you guys as the participants to take ahead auditing after accounting, which is very nicely designed. So let's start our presentation today. So an introduction about myself, which was already given by Lakshmi ma'am, so I'll be skipping this part. So yeah, this is my profile here. Going ahead. So the agenda for today's session is, I want to keep it pretty simple. I believe your first day was on the technological aspects that are covered, like maybe automation, blockchain, cryptocurrencies, data analytics, the ABCD of technological world. So what I will be doing is I'll try to connect the dots from there with yesterday's session on financial reporting and then proceed it to auditing. So this particular session, we are going to integrate three particular topics. Actually two. One is technology, which is covered in your first session, A, B, C, D, automation, blockchain, cryptos, and data analytics, to auditing field. That would be the essence of today's session. And then subsequently, we are also going to see a few discussion points on recent changes that are happening in audit, due to COVID restrictions. And then again, these are all also recent changes in audit because of technological advancements, but COVID is a separate exception, as we all know. So what kind of impacts are there on the audit field due to COVID? And then what are the recent changes happening around the accounting profession or auditing profession as such? Those things I'll keep it for the end. So if you see for the session today, the agenda would be, first, we'll be talking about what are the current procedures that we usually follow in audit of financial statements, wherein we'll discuss the traditional auditing procedures that we follow. If in case there is anyone in this session who are not practically exposed to real life audits, they'll be able to get a hands-on on that as well. Then after the current traditional procedures have been discussed, then we'll move on to the first part of technological updates in the audit, which is automation and audit. So how exactly is the paradigm going to change when we shift from traditional approach to a more automated techniques? What things are going to be automated? What things will never be automated? And as an auditor, what are the kind of changes that we should undergo, or what are the kind of changes that our audit strategy should undergo to inculcate this automation in our audit procedures. So all these things we are going to discuss. Then after that, we are going to talk about the second disruptive technology, I can say, which is blockchain technology, and how blockchain is going to impact on the audit profession as such. Then the third one, A, B is done. So the C would be cryptocurrencies. What are the issues and challenges that the auditors are facing when they are involving cryptocurrencies in the financial statements? Then if we move ahead, then we'll talk about data analytics and audit, which is we call it as ADA, audit and data analytics. So how data analytics will help the auditors? How can we shift from sampling based audits to more I can say analyzed data based audit? So how it is going to shift and all that stuff we are going to discuss. Then the last part would be challenges in audit due to COVID, recent changes that are there. So before I go much detail into it, I just want to communicate with you all. So I believe you all can unmute yourself and respond to me here. So in the first day, I believe you guys have been had a session on automation, blockchain, cryptos, and data analytics. All these four are covered in the first session, right?
Yes, they have been covered in the first session.
All the four. All right. So before I start with how audit is going to change because of these four factors, can someone in the group like take initiative and just give a quick overview or a quick summary about each of this? Like one person can choose automation and say what you have learned in the first session. Someone please take the initiative.
The audience, the participants can unmute themselves and answer, please.
Yeah, just a small recap or review or a couple of lines on automation. Just what you believe you learned in first day. Just a couple of lines.
Sir, I believe blockchain is a data cloud, something that helps you in like storing the data and going further on your analytical things which helps you in the decision making.
All right.
Cryptocurrency as such would be the digital currency that is coming up very recently, which can be a challenge to the present currency that we are doing. One more trading platform.
Another trading platform. Okay. All right. Anybody else who wants to share a couple of lines on these topics? Nobody else? Okay. I believe we would like to have this session a little bit more interactive if possible. I'll try to bring it up as much as possible. Okay. So let me give you a brief about how audits are done currently. We all know this traditional audit approach where you will bring all your books of accounts, all your journals, ledger, trial balance, profit and loss, balance sheet, cash flow statement, all these entire your accounting records. An auditor will come there. Let's say he starts the vouching and verification, which is a very traditional step, which is there in every audit procedure for that matter. So let's say as an auditor, we want to check whether the sales figures are appropriately shown, like the first line of your profit and loss. If you see, we call it as the top line. So the top line of your P&L, which is basically your sales revenue. So as an auditor, I want to confirm, is this value reported by the board of directors? Is it appropriate? Is it showing a true and fair picture? Is it the correct numbers that are shown to the shareholders? So as an auditor, what do we do? So we just ask the board of directors or basically the accounting team. We ask them, bring me the entire sales book. So they'll bring me the entire sales book. It consists of like 1 million sales transactions for an MNC, if you consider really. If it is a small business, maybe hundreds or thousands of transactions could be there. So what we'll do is next, as the auditor, we'll pick some samples from them. Let's say out of this 10,000 sale transactions, I'll pick maybe 2,000 or 3,000. And then I'll say them, bring me sales invoices for all these things. So they'll bring me the sales invoices. Then the entire procedure of audit of sales will happen. Like you will confirm whether the entries recorded in the books of accounts are matching with the invoices that are there physically issued to the customers, whether the date is matching, the amount is matching, the item description is matching or not, whether the sale has been properly authorized when there are discounts, whether the rate shown in the sales invoice is appropriate for that particular product or not, based upon the quantity based discount or anything like that. All the are the taxes appropriately calculated, are the delivery charges or any other packing charges, etc., etc., if they are there, whether they have been properly accounted for or not. So all these things as an auditor will be checking. So if I really need to give you even more purview picture or a bird's eye view about how an audit actually works, a traditional audit actually works, is first step is actually understanding the client. So first, as an auditor, before you start looking for evidences, before you start looking for confirmations, before you start talking about written representations from various parties, before you form an audit opinion, before you express an audit report, before you do all this, the first step that we need to do is to actually understand the nature and the transactions or the complexity of the business. So if you see here, I have summarized this in a single chart for all of your convenience. So the first step that we usually do is understanding the entity, right? So what do we mean by understanding the entity is understanding what is the nature of the business, what kind of business are they usually involved with, what is the complexity of the transactions. Sir, if I talk about a normal trading sector where they just buy the goods and sell the goods, they're not really such complex as such. But if I move it to a manufacturing sector, what happens? Again, purchase of raw material, then there will be work in progress, then there will be finished goods, there will be wastage, normal spoilage, abnormal spoilage. Normal spoilage is included in the valuation of closing stock. Abnormal spoilage is considered as an additional expenditure, which is directly taken to profit and loss. So we have a little bit of complexity involved in that. Again, cost per unit calculations and all, costing also gets involved in this. And if I move on to an even more hybrid platforms, like for example, nowadays this hybrid platforms have become very popular, where we do not usually engage in the sales ourselves, we do not procure the items. There is something called drop shipping. How many of you have actually heard about this concept called drop shipping? Anyone? A quick yes or no in the chat section, or if you heard about it, you can unmute yourself and share it with others. Drop shipping. No. Okay. If you haven't heard about it, then I would like to see responses in the chat section so that I know we are all still connected. Okay, I'm getting a couple of no's here. All right, chalo. Let me just explain it to you in a very small, quick, short manner. Imagine I want to sell on Amazon. I want to sell some product. But as a very small businessman, I do not have the warehouses, or I do not have, retail. I do not have all the money, capital, working capital, and all that stuff. I do not want to maintain like thousands of units in my godown and block my entire funds in working capital or inventory cost. I do not want that. I do not have a warehouse. I do not have the inventory. I do not have the human resources who can procure, maintain inventory, sell, all that stuff. So what I did is basically, it's very simple concept where whenever someone places an order on Amazon, I get that order, I go to some other website like say Alibaba.com. Alibaba is a Chinese retail platform where you get products for much, much, much cheaper prices compared to Amazon. If a product is sold for, let's say, $12 or $15 on Amazon, the same product you can find on Alibaba for maybe $1 or $2. It's more than 5x, 6x on Amazon platform. So drop shipping is a technology, or is a mode of business where we connect these two platforms. I receive orders on Amazon, I place orders on Alibaba, and while placing order on Alibaba, I can directly send the delivery to the customer himself, rather than I receiving the product and then again forwarding it to the customer. I'll directly ask Alibaba to deliver to my customer without using any labels. So drop shipping is a specific agreement where we say that please do not use your seller labels. I want my sales labels to be used on the packaging. So Alibaba, while delivering the product, they'll not use their labels. They'll put my logo, my all this delivery details on that. So this is drop shipping, where basically what is happening here, if you really understand, all our traditional costs or traditional flaws in trading, like Misho is kind of doing that. Misho is not completely doing it, but yes, in Misho also we can get the products for much cheaper price, which we can later sell on another platforms. The biggest problem here would be the delivery times. This Alibaba, Misho and all these things take much longer time than what Amazon usually takes. Amazon, you have 1 day prime delivery, 2 days deliveries. This takes at least 1 week to 10 days. So those complexities will be there. But anyways, so if you understand as an auditor, suppose if you are doing the audit of a client who is dealing in this kind of drop shipping business. So your traditional audit activities like verification of inventory, verification of assets, sales invoices, purchase records, procurement records, none of these are available in this case because you are not actually doing anything. You are just receiving an order and then placing an order. You have absolutely no inventory or anything like this. So the entire procedure or the strategy for the audit has to change. So the first step as an auditor, what we need to do is first understand the entity clearly. What is their nature of business? What is the complexity? How many volume of transactions are they doing on a daily basis? What is the industry positioning? Industry positioning means some industries are very well matured. Like if you see maybe software sector, hardware or automobiles, these are all very well established, already there since so long. They are almost all very stable industries. But if you take certain industries like, let's say, insurance, sir, insurance has also been there for so long, but insurance is a very radical business. It has to keep evolving. It has to keep changing. We all saw how badly insurance companies lost money in 2008, housing loan bubble. We saw how insurance companies lost money in 2019 during COVID. I know specifically one of an insurance company. I was involved with their audit actually. So they ran into loss which was equal to their 5 years of revenues. I'm not talking about 5 years of profit, 5 years of total revenues, premium collections. 5 साल का premium collection gone in just 1 year in form of reimbursements during COVID. So this insurance company is there. So a little bit industry positioning would be, keep on changing according to various circumstances that we see. And once you understand the industry positioning, next we also need to understand industry placement. In this particular industry, where exactly is our business placed? Let's say a software company like Infosys is there. So if I take Infosys as an example, software sector is a very stable sector. It has been proven since pretty long with a very stable growth rates in the software industry. If you see Nifty IT index, so it has a very stable growth rates, and thanks to lockdowns, technology has gone crazy and their IT sector prices have gone like rockets, skyrocketed. But anyways, they have shown very constant growth rates. Abnormal growth is there, but we never usually see abnormal failure in the IT stocks. Very rarely happens, maybe once or twice in the entire history of IT. So in a very mature sector, Infosys or TCS for that matter, these are very mature and very well established, well positioned firms. So before you start an audit, you need to understand in which industry it is placed, what is the industry scenario, and within that industry, what is the current scenario of this particular company or this particular audit client for us in other language. And similarly, product life cycle. See, for example, there are some products which usually have a shelf life of hardly 2-3 months. If you take mobile phones nowadays, we might have used mobile phones for maybe 3 years, 4 years, 5 years, I believe. Nowadays, kids, not just kids, even me for that matter. So we change our mobile phones on a very frequent basis. And if you see Samsung or if you see OnePlus, if you see iPhone, they are releasing a new model every 6 months. So the shelf life, the product life cycle for mobile phones is hardly 6 months. Now the next question would be, sir, we are auditors. Why are we worried about what is the industry doing? What is this company doing? And what is its product's life cycle? Why are we worried about it as an auditor? Isn't it very simple for us? tick on the sales invoice, tick on the accounting voucher if the numbers are matching. Isn't that all we need to do? Not really. See, the amount of audit procedures you need to perform, or the I can say the sampling that you do, like out of 10,000 vouchers, for example, how many you have to pick? Should I do the audit of entire 10,000 vouchers? Should I pick 5,000 or should I pick just 1,000? So that question can be answered only after you really understand all these things. So if I take Infosys or TCS, I know that the risk involved in the industry is less. The risk involved with this particular company is less because of its proven track record. And therefore, after considering the entity, its environment, its risk, business risk, and all that stuff, I can say, as an auditor, my overall risk of expressing a wrong opinion is less in this particular case. So I can go with a lower sample. I can say for Infosys or TCS, I can say maybe out of 10,000 sales vouchers, I will pick hardly 2,000 or 3,000. I can rely upon that sample because of the proven track record. If that is not there, I'll not be able to pick such low sample. If I take you to a new, some kind of a software company which is having huge ups and downs on its revenue curves. One year it has a 5 million sales, other year it has 200,000 sales, again 3 million, again 100,000. So if such kind of unstable revenues are seen, I'll have to worry about the audit evidences that I'm gathering. So the first step would be understanding the entity. Then we'll move on to the actual audit procedures, test of controls. How well are the control procedures in this particular company? So if the control procedures are really very efficient and effective, like they are very well designed and they're also very well implemented. Designing something talks about the efficiency of it. Actually implementing it talks about the effectiveness of it. So if a particular control system is both efficient and effective, well designed and also well implemented, then as an auditor, you can rely more on this company. As in not on the company as such, but you can say that, okay, in this particular client or in this particular company, we can see controls being very efficient and effective. So the chances of fraud or the chances of misstatements are very less. So you can reduce your sample size, you can reduce your audit work. So a simple example, if you take St.Ann as a college, they have very strong control policies and control procedures in place. That is why parents rely on them. That is why parents feel confident to join their kids in the college. It's a very simple thing. If your controls are efficient and effective, well worked, then you can rely upon those controls to consider that, yes, the chance of mistake here is less. No one can say that there is no scope for error, 100% error free. That is not possible. That is why if you really see in audit, we say true and fair. We will never say true and correct. Something like financial reporting can never be absolutely correct, sir. It can only be fair. Let me just deviate from our discussion here a little bit. Can you once confirm if everybody are still there, or am I mumbling and rambling around something? Are we all still connected?
Yes, sir.
Yes, sir. And it's interesting. Please carry.
Right. So let me just slightly deviate from a topic here. Okay. So in our books of accounts, we have very basic concept which is called depreciation. We have been doing depreciation. We have been teaching depreciation for ages. So I'll take the simpler one, not even a little bit calculation complexity is there. If I take written down balance method or reducing balance method, let's go with the more easier one, straight line method of depreciation. We say it very simply while we teach to the students also. We just say straight line method is very easy. Just take the value of the asset, depreciable value of the asset, which is basically cost of the asset minus its residual or salvage or whatever you want to call it as. So cost minus residual value divided by estimated useful life. Now the problem here is we stop at that because it is sufficient for the student to know that cost minus any residual value divided by life of the asset. But if you take them a little bit further, the next question that should be asked is estimated useful life. Now, who makes that estimation? Is it the shareholders? Is it the board of directors? Is it the accountant? Is it the audit committee? Or is it if there is any particular accounting committee or an accounting team involved in this particular company, do they do that? Or does the fixed asset manager, if you have a particular manager for fixed assets, will he determine the estimated useful life? Who is going to calculate or who is going to estimate that life? Because in our textbooks, question clearly tells you the life of this asset is 10 years, life of this asset is 8 years, 5 years, 6 years. We just say divided by 5, divided by 10. Our work over there as a faculty is done because calculation is done, answer is achieved. But to teach audit to the student, the next question that should be raised is, who does this estimation? So obviously the answer would be whoever is given that responsibility in a company based upon its company's policies or company's their internal hierarchy charts, right? So in the company, it could be, usually it is the responsibility of board of directors, but board of directors can delegate that to accounts team, or board of directors can delegate that to a fixed assets manager. They can delegate it to someone else. The primary responsibility would be on board of directors. Now, my question is, let's say for a computer, board of directors assumed 5 years as the useful life. As an auditor, I am saying that no, you cannot take 5 years. A computer can be used only maximum 3 years. Who is right here? Who is correct here? There is no direct answer. So maybe, see, for my usage as an auditor, for my usage, I'm able to use a computer only for 3 years. Maybe they, in the company, they have nice maintenance going on. Because of that, they are able to use it for 5 years. It's a personal usage pattern. It depends upon how we are using it. See, a mobile phone in our hands can work for 5 years. A mobile phone in my hands will work for 2 years. Mobile phone in a kid's hand will work hardly for a couple of months. It's the same mobile phone. It's not in the asset, it's in the usage. So estimated differs from person to person, company to company. When such kind of estimates are there throughout your financial statements, you take multiple areas. There are so many areas where we use estimations. IAS 37, provisions, contingent liabilities and contingent assets. We say provision for future expected amount, provision for bad debts. No one knows how much would be exactly the bad debt in a company. We create it on an estimation basis. That estimation might become correct or not. So how can an auditor say these financial statements are true and correct when you do not know, because there are so many estimates involved in that? Depreciation is there in P&L account. Provision is there in P&L account, and the same is shown in the current liabilities of the balance sheet. Similarly, fair valuation is there. Assets are shown at their fair values, IAS 16, property, plant and equipment. Intangible assets are shown at fair value, IAS 38, intangible assets. Impairment reviews consider future expected cash flows from an asset while calculating recoverable amount, IAS 36, impairment losses. IAS 41, investment properties, IAS 40, investment properties, 41, biological assets. You name it, across the set of accounting standards, so many areas we use estimated values. When so many estimations are involved, how can an auditor say true and correct information is given in this on this piece of paper? That is why in audit we never say true and correct, we say only true and fair. Anyways, so that's about traditional audit. Let me I got deviated a little. Let's come back to our audit session. So first step is understanding the entity and its environment. We understood it. ISA 315, understanding the nature of an entity and its environment, assessing the risk of material misstatement. Again, we do not need to really know the entire standard numbers as such. It's okay if we do not know it for the purpose of this particular session. Then we need to do a test of controls, which means we have to understand how efficiently and how effectively are the control procedures in an organization. How are they designed and how are they implemented effectively? Then once you know the strength of their control system, you can define your audit procedures. You can say this organization is less risky. It has less risk in its business and complexity is less. And also they have very strong control policies. So as an auditor, you can rely more on them and you can reduce your overall audit procedures. We call them substantive procedures, right? So analytical procedures, test of details, all this stuff, sampling, evidences, you can reduce the amount of procedures, audit substantive procedures that you perform depending upon the client's client's nature of business and its controls efficiency and effectiveness. And once we do our audit evidences are gathered, we did all our audit procedures, we gathered written representations and all. Then we'll move on to the final stage, which is reviewing and reporting. We review all our audit procedures, whether everything has been done or not. We have an audit checklist. So everything in the audit checklist has been ticked out or not. And if everything is completed, then we'll see what are the total mistakes in the observed by the auditors. Then that will be communicated with the directors. We'll say that, okay, these are the list of mistakes we identified. So then the directors will say that, okay, fine, sir, we agree with your identifications. So we'll rectify those mistakes. So they'll rectify them and they'll give you a revised financial statements. You will see whether all the issues identified are rectified or not. Sometimes director can say that, no, sir, we do not agree with your perspective. You think it is wrong, but we think it is correct. You think an asset's life is only 8 years. We think it is 10 years. You are saying fair value of this particular asset is 100, but we believe it is 150. So there could be disagreements between directors and auditors. So auditors now, after considering everything, they'll have to express an opinion, whether they should give a completely negative, adverse opinion, or should they give a qualified opinion. Qualified as in everything is showing true and fair, except for this couple of items. That is called as a qualified audit report. Then adverse report means everything is bad. Basically, it is not showing a true and fair picture, or it is not prepared in accordance with applicable financial reporting framework. We say it as basically IFRS, INDAS, whatever is the applicable standards, whether financial statements are prepared as per those standards or not. Now, final step would be review and reporting. So this is a traditional procedure that we follow in the course of audit. Kindly confirm in the chat section once. Are we all good till here? Am I making sense? Am I taking you through appropriately, or do you want me to slow down a little or fasten up a little? Any suggestions or any changes you need? Perfect. Good. Thank you. Thank you. Cool. Chalo. Now let's move further. So this is what we do in a traditional audit. Nice. We understood that. How exactly are these technologies, A, B, C, D, automation, blockchain, cryptocurrencies, data analytics? How are they going to change us, sir? How are they going to impact the field of audit? Before that, just for my sake of my convenience, let me quickly talk about what are these technologies once again, so that in case there are any gaps, that will get bridged up here. First step, which is automation and audit. I'll talk about audit later, but first let me just touch upon the automation part. So there are so many areas in our business which are very monotonous, which are very repetitive in nature. So automation is a technology. It's actually a software kind of a thing, a code. You can understand it as a program. So automation is a technology which tries to eliminate human hours of wasted time on doing this monotonous repetitive tasks. I'll give you a very simple example to easily understand automation in accounting field. Automation as a technology has lots of scope, but for us, for accounting faculties, what exactly do we need to know about this? I'll give you in a very short example. We know customers, we know credit customers. Basically, we call them sundry debtors in our books of accounts, or else if you are teaching US accounting courses, you will call them as accounts receivables. If you are teaching UK courses, we call them as trade receivables. Whatever title you give them, ultimately sundry debtors, accounts receivable, trade receivables, ultimately everything is basically customers, money receivable from customers, where we have a right to collect the money from them. Now, imagine a company which has thousands of customers, credit customers, thousands of sundry debtors. So we appointed one guy to sit there in the accounts receivable department. What he is doing is daily he has the same task, sir. What he will do, he will open up the list of invoices, date of the invoice, amount of the invoice, customer name, due date, whether it is payable in 30 days, 40 days, 50 days, 60 days, 90 days, whatever may be the days, due days. And then what he will do is due date will be there. So based on invoice date plus number of credit days given, due date will know. So he will check what are the invoices that are falling due today. He will check that. He will fetch all the invoices. He will see which of them are paid, which of them are unpaid. For all the unpaid invoices, he will send emails to the customer stating that this is your invoice, which is issued on this particular date. The amount payable is this much. You have to make the payment today. Today is the due date. If you cannot pay, if you do not pay by the end of today, then interest at the rate of 10% will be charged, or 12%, whatever may be the interest, or there will be a penalty of this much amount. So he sends an email to each one of those kind of customers. So simple example, understand it. We are also doing it to our students, aren't we? Like we create a list of students who have paid and who are not yet paid, and we send them messages, mails, or communications to their parents and all, saying that your student, your kid semester fees is not paid, or something like that. Now imagine in this same company there is one small software wherein there is a button called end of day, just a small button, or else process, or whatever may be the name of the button, sir, whatever you want to call it. So the moment I click on that button, the software will automatically look for all the invoices, filter out the paid invoices, will only show the unpaid invoices. In that, what are the invoices falling due today? Those invoices automatically it will go and look in the customer master database, collect their name, collect their email address, connect to Microsoft Outlook, open Microsoft Outlook, compose mail, type in the name, type in the email address over there, fill in the details from the invoice, amount, due date, etc., etc. Attach that invoice to that email and send it to the client. Everything is automatically done. We are not doing anything. The system will automatically do this. And the system also goes ahead. Someone trying to say something? No? Okay. So the system automatically goes ahead and says that, okay, in the next 3 days, these invoices are due. So we'll send a reminder to them, a friendly reminder. In the next 7 days, these are the invoices that you have to pay to this company. Please consider this as a gentle reminder. System automatically does that. Past due ho gaya, system will automatically calculate the interest or penalty amount, late fees, whatever you call it as in your company. This is best example of automation, sir. Now, as an auditor, how is this automation going to impact us? Now understand this. If as an auditor, you are doing traditional approach, you would actually go and see whether that particular guy sitting there, is he correctly filtering out? Is he correctly sending it out to the clients? Are the emails received by the clients? Are they giving feedback or are they giving replies? How much overdue is there? How much past dues are there and all that stuff? You'll manually go and verify. Now, in this platform where everything is automated, as an auditor, you are not going to verify the work of a person. You're going to verify the work of a computer program. And 7th standard, advantages and disadvantages of computer. We all learned that advantages of computer is it does not do mistakes. Computer does not do mistakes unless there is a mistake done by the human while programming it. If I, as a programmer, give a wrong code, system will execute the wrong code correctly. System does not do the mistake. Human behind the system can do a mistake. Now, as an auditor, there is no point in me sitting in front of the computer and saying, is it clicking the correct button? Is it uploading the correct invoice? Is it sending the email to the correct person? No. Rather, as an auditor, what I need to see is it programmed correctly or not? So that is what I have mentioned here. If you see, we clearly stated that, can I get this thing? Pointers. Yeah. So here, the focus would be on the test of systems rather than testing the details of the system. So here now with the automation, we are not worried about the details of the transactions, because if the program is correct, if the coding is correct, there will not be any error because the system is performing it. So my worry as an auditor is whether the coding behind the program is correctly done or not. So I'll be focusing on the systems rather than focusing on the details. Are we connected? Is it all clear? Is it making sense? How, as an auditor, what kind of changes are we expecting due to automation?
Yes, sir, it's very much clear. Thank you.
Cool. Thanks for the confirmation. Thank you. Okay. So as an auditor, automation is going to change the way we see at things. Rather than focusing on the how the things are done, we are focusing on what is happening behind the screen. That is our first step. All right. Thank you. Thanks everyone for confirming that. So sir, as an auditor, traditionally, what are the procedures that we perform? Just a second. Let me pin this and make it single so that I can just throw it up to the corner. All right. Okay. So as an auditor, what are the usual procedures that we perform? Inquiries. We talk to various people, we question them, we get details from them, we ask them information basically. I learned a very nice thing in my very initial stages of audit when I was doing training in 2013, 2014, I believe, 8-9 years back. So my audit partner, basically, the principal, we call him as audit principal. So he was never actually involved in the audit procedures. I used to think initially, very starting stage, I was naive back then, I was ignorant. So I thought we are doing the real audit. So we are vouching, we are verifying the transactions, we are checking the balances, we are physically calculating the cash balance and checking cash balance as per books is this much, actual cash available is this much, it is matching, not matching, assets are there physically available. We are doing the entire audit process. But later I came to understand this entire things that we do now, the entire groundwork will only help us get 30 to 40% of evidence, 30% max. 70% of the audit evidence can be obtained only by inquiries if you really know whom to question and what to question. Simple fact, whom to question, what to question. If you know these two, you can gather unimaginable amount of audit evidence without shedding a drop of sweat. As a faculties, I believe you all can easily agree with this particular thing. Instead of if some mischief is happening in a particular classroom, we know we do not need to gather hundreds of evidences to find out who is that particular person. We know exactly whom to question. We'll catch that 2 or 3 kids in the class and we'll ask them exactly the questions that we want and we'll get the answers 90% of the time. So it's not about the groundwork really. It's about inquiries, the first and the biggest part in audit procedures if you really know audits. Unfortunately, I say this with utmost respect to the audit professionals out there. Nowadays, thanks to COVID, lockdowns, restrictions, automations, virtual audits, what all nonsense happened, inquiries have become very bad. So imagine before COVID, I was actually going, I was talking to a client, I was looking them in the eye and questioning them. The chances of getting caught when they say lie is very high. If we as an auditor is, skilled enough or experienced enough, we can easily catch a person when they are lying at the time of inquiry. Now what is happening? There are still inquiry procedures happening in audit, but now there is a questionnaire, a Google form or some website link, a survey link that will be sent to the board of directors. They'll say yes, no, yes, no, yes, no, yes, no, yes, no, done, submit. The problem is nobody knows how effective they are or how efficient they are because that personal touch is missing in the audit procedures. But anyways, that is one of the problem that is being faced nowadays due to COVID impact on audit. That is first one, inquiry. Confirmations. Like for example, a customer's record in our books of accounts says receivable from Mr. X, 10,000 rupees. So we ping them up and say that Mr. X, we are the auditors of this ABC company. The books show that you have to pay them 10,000. Can you confirm, is the due shown in your books of accounts is 10,000 or is it different? So we get a confirmation from them. Observation. We observe when the activities are happening in the organization. Let's say something like inventory counting procedures or provision calculations or any procedure when it is being performed, we observe as an auditor. Inspecting the documents, contracts, term deposits, fixed deposits, rental agreements, we inspect all those documents. Inspection of the assets, we go and physically check whether the assets shown in the balance sheet are actually there in the company or not. Similarly, recalculation, whether the calculations are appropriately done by the client or are there any calculation mistakes. Arithmetical accuracy is re-verified by the auditor in recalculation. Re-performance, whatever laid out procedures are there in the company, auditor performs them to see that whether things are appropriately functioning or not. I might give you a simple example for you to easily understand how exactly does this re-performance function. Like, let's say in a college, if a student has to go out in the middle of the college, there might be a procedure laid out. Maybe the college rules can state that first you have to take the approval from the particular class teacher, whoever is taking that particular period. Then after the approval from the class teacher, you have to get it from HOD or dean or whatever is the hierarchy in that particular college. Usually you have HODs, I believe, head of the departments. So after getting a faculty approval, you have to take a approval from the HOD. And if your attendance is, if the particular student's attendance is below a particular threshold level, say they are not having minimum attendance of 60, minimum attendance of 70, they might have to talk to student counselor or quality control team or any team that may be there in the organization. So there are steps here. Step 1, class. Step 2, HOD. Step 3, student council or quality control team, IQAC or whatever it is. Then step 4, show that particular slip that you get, approval slip, show it to the watchman, then they'll allow you to leave out. So there is this particular control system in place. As an auditor, I want to see if it is working or not. So what I can do an observation of that. Observation means I can ask a particular student, I can pick someone and say that I want you to come out of the college now along with me. Then whether she or he, whether that particular student is actually following the entire steps or not. If that particular student is not following those steps, will he or she be able to come out of the college or not? So that is observation. Or else I can myself act as a student, try to go out of the college and figure out if someone is stopping me or not, if I do not follow the entire procedure. So whether it is being properly implemented, whether that control system is effective or not, we get to know through re-performance of that particular procedure, entire procedure. So these are all audit procedures that we used to do when we were doing traditional audits. But now, thanks to automation and audit, most of this stuff that we discussed here is now automated. Computers are doing them. Now, when computers are doing them, there is no scope for manual errors or anything like that. So if that is the case, as an auditor, your responsibility of doing the traditional audit is reduced a lot. Rather, your workload is being directed or pointed in a different direction. So that is what we are going to talk here. Right. Sir, I'm not going to give you what are the definitions of automation and all. I already explained it, so I believe that is more than sufficient. So intelligent automation is more important than blindly automating some stuff. It's not about how well you work something, but how important it is and how useful it is. That is also pretty relevant for us to define the efficiency of a system. So there are lots of technologies that are there, sir. Nowadays there is NLP, natural language processing. Now I want to really test this out. How many of you know about this word NLP, natural language processing? How many of you know about it? Anyone? Anyone in the entire audience heard the word? Only one heard the word. Okay. Let me rephrase my question. We have 40 participants online right now. Is there any single person who has actually used natural language processing technology? One person in the entire session can hands up. If anybody has used NLP in their real life, can either hands up or say in the chat section or unmute themselves and say it out. Nobody used it. Natural language processing system, NLP. All right. Okay, let me ask a question in a different manner. Sir, how many of you have used Google, Siri, Alexa, or any other voice assistants? On your phone, on separate devices, on TVs, wherever it is. Nowadays, TVs are also having this remote controllers where you can search for a video by just, dictating that, word predictions. All right, sir, maybe all of us used voice commands. Thank you. That is called natural language processing. See, this is the kind of situation that is happening across the globe. Most of us are using these trending technologies without actually knowing the technology behind it. None of us were actually able to connect with this word natural language processing. But the moment I said Siri, Google, Alexa, most of us have used it. And even Microsoft Word, for this particular purpose, let me share you something here. If you are using the latest version of Microsoft Office, Office 365 or Office 2022, there are features where you can open a Word document, you can turn on voice recognition, and you can say something and the system will automatically type it out. Let me just check for that. Oops, power. Okay. Just a second, guys. Let them turn on the inverter before this thing comes, generator and all. I'm trying to show that for you as a practical example kind of thing. Text extractor is also one thing kind of that only, but I don't know where exactly it is. Okay, let me not waste time searching for that, but you can see here, basically this is text extractor, which is Microsoft Power Toys. It's one of a tool. So what it can do is it can extract a text from an image and you can paste it in any document. Windows Shift T is there. And all I need to do is, let's say this is a image right now. So if I just select this part, it will be able to extract the text from this and I can paste it wherever it is. Yes, Google Lens does that, correct. Google Lens also does the same thing. So isn't it natural language processing? It is. It is that. Even Siri has it. So like this, we are using these technologies, but we are afraid to talk about them because we don't know the technical word. But we are very comfortable in using them. Let me just make it easy for you more. Machine learning sounds like some big technology that is happening behind the screen. Something is happening. Let me tell you a very simple example. If you take out your WhatsApp, if you just open your WhatsApp or any other messaging platform for that matter, if you use Hike or Hypergon nowadays, Telegram, Instagram, Facebook, WhatsApp, LinkedIn, any platform where you can send a message, just open it up. Your keyboard will pop up. You type something, there will be predictions shown on the top of that keyboard. It says your next predicted word could be this. And I can say this, I believe I would be right in saying this, at least 70% of the time that predicted word is correct. We are trying to type that only. Do you agree with that? Keyboard predictions are 70% of the time at least correct. All right. How is your keyboard predicting what is your next word? How does it know? Is it some kind of telekinetics or whatever, telekinesis or something, sentence formation? Not necessarily sentence formation. Yes, I agree to that. Sometimes grammar predictions would be there. Words also, it can predict what is your next word, not just grammatical corrections. Basically, the system is using a technology called machine learning. Machine learning it is. A machine is basically learning your usage pattern. It is identifying what you are doing, how you are doing, what you are typing, exactly previous messages, which the machine understands. So the keyboard actually keeps a history of what you are typing. And based on that, it predicts what is your next word. Let me just show up something. I don't know if you'll be able to see it or not. I'm trying to just open my phone. So I use this app called Microsoft Swift Keyboard. I do not use the default keyboard that comes in the phone. I always install this Microsoft Swift keyboard. The reason is, what this will do is, when I use this application, Microsoft Swift key, it keeps a history of all my typings, all my words that I type. and it can predict my next word much accurately now, because I have been using it for, I believe, 2016 or something, maybe 5-6 years. Since then I have been using the same application. So now it is at a stage where it even predicts Telugu words also. So when I'm texting my dad, I might be texting him in Telugu, so it predicts my Telugu words also, because it knows what I'm trying to do. And actually there is this I believe there is this option where the software also knows which key I am typing. I don't know if you will be able to see this or not. It's being blurred out, I believe, but this is a track record of what is happening. The system says, I'll just read it out for you. And heat map. So yeah, you are able to see a keyboard and some background, blue color background behind it. Can you confirm if anyone? Yes. Okay. So it is basically showing a heat map. Heat map as in which key is pressed how many times. So apparently Z is the lowest typed one. Obviously we do not use the letter Z much, the alphabet Z much. So like this, like there are so many analytics that are going on behind it, which is basically nothing but machine learning. A machine is trying to learn what a user is doing. It's not a big thing to understand that technology, but we get afraid of those words. We do not want to learn because we think something big or something huge is happening. We might not be able to understand. These are our misconceptions. All we need is someone who can make it very easy for us. Simple. Or any resource, maybe a YouTube video or a blog, which can explain it to us without complicating stuff for us. As simple as that. Next comes computer vision. Computer vision again is basically where a computer thinks like a human being, acts like a human being. It understands your expectations, or it understands what you are trying to achieve, and it will replicate that. Like Chitti the Robo, if you really want me to make it easy for you, Robo Rajnikant movie is there. That is computer vision basically. All right. So we can use these things to reduce the time spent on repetitive, tedious auditing tasks. Command given by words to machine. Yeah. Anyways, so getting back. So you can understand here in the audit field also, there are so many areas where we as an auditor perform manual stuff, repetitive manual stuff. We can ask the program to do that. So for example, I believe you all are aware of GST returns, right? Just GST returns, GSTR1 sales, GSTR2 populated, auto-populated purchases, GSTR3, where you just calculate 3B, you calculate sales and input credit, output credit, tax payable and all. Basic GST returns you are all aware of.
Yes, sir, we are aware of that.
All right. So now imagine, sir, as an auditor, don't you think it is my responsibility to check whether the books of accounts, figures shown in the books, are matching with the GST returns? It is one of the responsibility. So to do that, what am I supposed to do, sir? Go to gst.gov.in website, log in with the username and password, go to returns dashboard, click on that month, click on that year, click on that return, and then check the number and compare it with the books of accounts. Sir, as an auditor, we are doing it manually. What if there is a software which can just automatically go to the website, type my username and password, log in, fetch my details, and give an Excel file? I don't know if you are aware of this or not. Now, Income Tax Department has made this change. They understood people need it. So what they're doing, you can download most of your information in an Excel spreadsheet from Income Tax website. I think the session would be, the time would not be sufficient for me to show all that stuff. You can just go to Income Tax login, and you can just see on the top, you have a button called download in Excel. Like it will show all my summary of all the returns that I have filed, what is my annual income, on what date I have filed a return, what is the acknowledgement number for ITRV, when it is verified, whether it is processed or not, is there any refund or not. It will give me a simple spreadsheet for the entire 10-15 years, whatever I have been doing my IT returns for. So that is basically how an auditor also can take advantage of these automations. So instead of you manually gathering evidences, you can use a system to do the work for you. And also it will help you in a more granular data analysis. Granular as in more detailed, in-depth analysis can be done because sir, simple logic. Your time, instead of being wasted in this monotonous, routine, repetitive task, you are now investing your time in this data analysis and more important stuff, because robots are taking care of that for you. Soft robots, basically your program, computer program is doing that stuff for you. So you are now using your more worthy time on more important things. So more granular level research can be done. So I'm just trying to show some charts for you. So due to automation, we are moving from test of details, actually verifying the minute details. From there, we are moving to testing the systems, as I have told earlier. See, test of details may you do transactions, events, balances, whether they are presented properly, disclosed properly. All these are auditing things. From there, we are moving to test of systems, computer aided automation systems or computer assisted auditing techniques, basically. So using some test data on a live system, using dead data or audit softwares are there, all this stuff. To give you a simple understanding, simple example to make sure that this chart is easily understood. Sundry debtors should always show debit balance. Receivable from customer, debit balance should be shown. Suppose 10 customers accounts are showing credit balance. You might be wondering as an auditor, like, why is a customer account showing a credit balance? So technically speaking, there could be two reasons, sir. One reason is that they paid advance. Some customer gave me an advance, so I recorded an entry, bank account debtor to Mr. X account. So X is showing a credit balance, which is okay, appropriate. As an auditor, I am fine with it. Second possible case is where money collected from the customer is recorded, but sales invoice is wrongly recorded to somebody else. We have a topic in plus one, plus one, inter first year or plus one or 11th standard, whatever it is, depending upon the state and all. So in plus one, you have a concept called rectification entries, where we teach the students basically when there is a mistake, how to rectify that. So there we teach them now, like sales made to Mr. X have been recorded in Mr. Y's account. So what do we do, sir? We reverse the transaction. So Y account was wrongly credited, so we debit now, and X account was supposed to be credited, which is not credited, so we credit now Y account debtor to X account. Something like that. We do rectification, we teach that. Now, as an auditor, how will I catch that? As an auditor, how will I figure out that this sales invoice was supposed to go to Mr. X? Why did it come to Mr. Y? Simple. Mr. X account will show a credit balance now, because collected from X is recorded. Invoice to X is not recorded. So only amount inwards is there, but sales is not there. So it will show a credit balance. An account which is supposed to show a debit balance is showing a credit balance. Now, sir, there is this software called CATS, computer aided audit techniques or computer assisted audit techniques, basically, where you can take the help of a computer program in your audit. Now, all of you are aware of Tally, I believe. Tally software. Rectification of errors. Yeah, thank you, ma'am. That was the chapter name. Rectification of errors. Correct. So I believe all of us know about Tally ERP software, accounting software, ERP software. Now, in that, if you purchase the auditor license, there is an auditor license in Tally, accountant license is there, auditor license is there. I think I can show you very quickly. Auditor edition will be there. So in auditor edition, what will happen is there are some separate tools. So if my memory is serving me right, there is a option called not incorrect. There is a special word for that. I'm not able to recollect the exact word, but you can see this is auditor edition. Tally Prime Auditors edition would be there. So it will show these kind of things. Like, for example, sundry creditors should be showing credit balance, but it is showing debit balance. Sundry data should show debit balance, it is showing credit balance. Investment should show debit balance, it is showing credit balance. Maybe profit on sale of investment is not properly recorded. It is not separated out. So because of that, it is showing a credit balance, anything like that. So exceptional items, right? Okay, I was able to recollect that word. Exceptional reports will be there in Tally. If you click on that, you can find out all these reports. Okay, So like that. So those are basically using the systems to assist you in the course of audit. Moving around. So sir, olden days we used to follow something called as black box approach. So black box approach mein, we used to do audit around the computer. See the chart, the image here on your screen should be able to clearly visualize that. Audit used to be done around the computer. So source document is inputted into the computer, output will come. Auditor is only worried about input and output, ignoring the processing part of the computer. Auditor looks at the source documents, sales invoice. Auditor looks at the financial report, sales ledger. Computer ko he will avoid. That is auditing around the computer. Input and output is being verified, processing is ignored. Whereas nowadays we are doing more CAT approach, basically computer aided audit techniques. So here we are also, along with source and output, we also do the audit of the computer, whether the programming is appropriately made or not. Is the tools used in the software appropriate or not? Are the reports generated by the software correctly done or not? So you are also doing the audit of the computer program. So this is your first part of today's session, sir. First topic on today's discussion, that is how automation is helping the auditors. I believe everything is clear.
Yes, sir, very clear.
Okay, so let's move on, sir. What's the time? 6:15. Okay, we have 15 minutes each for each topic from here, which is planned as planned. So the next topic in our discussion would be blockchain. So what is this blockchain, sir? Already you had a in detail session on blockchain on day one, I believe. So to make it easy for us to easily understand, blockchain is kind of a platform where people all connect, and it's more transparent and it is immutable, as in once a record goes onto the blockchain, it cannot be edited or it cannot be deleted. So blockchain is basically a public platform. So that is something that we need to really understand, because that is the essence. It all starts with that. Blockchain is a public platform. There are two types of blockchains: permissionless blockchains and permissioned blockchains. Permissionless means anybody can participate in that. It is more like a public blockchain. Anybody can just go on to that blockchain and become a participant of it. Permissioned blockchains may only approved people can become a part of that. Like for example, if a company is creating an internal blockchain, so only employees can become part of that blockchain. So it is permissioned. So again, I'll not go into the details of the technology as such, because my focus is on audit. So I'll not go detail into the blockchain technology. But for you to easily understand, and I'm just showing a couple of pictures here. So the first picture is where whoever it is, a person is sending money to another person. Let's say the first person has a ICICI bank account, and that person is sending money to another person who is having an account in SBI. So from ICICI, the money has to go to SBI. So what the person does, first they go to ICICI bank, they deposit their money over there, and they'll fill out a withdrawal slip, and they'll fill out the transfers, or they'll issue a check, whatever may be the methodology that they are following for transfer of money, NEFT, IMPS, RTGS, or whatever it is. So the first person sends an instruction to their banker, I want to transfer funds. So the banker will check the balance. If the sufficient balance is there, the transaction would proceed further. If the balance is insufficient, they will record in the ledger transaction rejected due to insufficient funds, and then send it back to the sender. So here the chain cuts. If the sufficient balance is there in the account, then what do they do? The funds are transferred to the receiver's bank. From ICICI, the money will go to SBI. Now SBI will deposit that money in the respective person's bank account. Funds are transferred to the receiver. And while SBI is delivering that money or transferring that money to the ultimate recipient, they record in their books, paid to this particular person on this particular date. This is how a typical transaction happens in a traditional banking cycle, right? Now, sir, how exactly is this going to change if I move into blockchain? Okay. So if we move to blockchain, you can see there are lots of computers now involved. They are still trying to send the money only. There is no other change here. Still, it is sending the money only, but lots of steps are added here. Now, what are these steps supposed to do? I'll just try to give you a very low level understanding of the technology. So first, the sender will send a transfer request to their bank, but that request would be in an encrypted message. It won't be publicly visible to everyone what is happening, sir. It would be an encrypted message. Only people with the private key. There are two types of keys, public key and private key. Like, for example, if you have a maid at your home, you're going to your office, you want the dishes to be cleaned. So you give her only main door ka key. You don't give them the bedroom ka chabi, right? So like that only you have two keys, public key and a private key. So people with the public key can only access some of the information. They can approve it, reject it, only basic information. People with the private key will be able to access the complete information. So I'm trying to just touch base on the technology, sir. If I go into blockchain detailedly, it will take me a couple of hours to just talk about blockchain. So I'll not try to do that. So the sender will be giving an encrypted message. That encrypted message is broadcasted to the entire network. The entire network will have public keys, not the private key. So this public keys, with that public key, they can say approve this transaction or reject this transaction. Now, when majority of these people say approve, it will go proceed further. And then people with private key, like the bankers and all, they will check the balance and all that stuff. And then they will also approve it. So here also approval, here also approval. Then out of the entire records, and another block will be created stating that money is being transferred from this person to this person on this particular date. It will be data block will be created. That block will be added to the chain. And to the end of the block, there will be a key. We call it as a hash. So this is like a protection. The moment you change something, this hash gets changed. All right. So I believe it would be appropriate for me to show you something. So there are so many hash analyzers. You can see tool to identify hash types is there. So let's say I'm just typing something here, or I'll just say my name. And if I type analyze, you can see hash is not found, right? This bit length is 0, character length is 13, character type is unknown and all. Or if I take this as an example, for this, they gave you some hash inputs. And if I just paste it there and analyze, now you can see MD5, MD4 hash, bit length is 128, that is the encryption. 32 characters are there. It is a hexadecimal, as in characters plus numbers are there. So these are all basically hash, how it works and all. I can go a little bit into it, more detailed into it, but I don't think that would make much sense for us to, dive deep into this particular example. But this hash, what it does is it's a unique number. Any change to the data will automatically change your hash. I don't know if I can find it easily. Just let me give it a quick try.
Sorry to interrupt, sir. Your screen sharing was stopped.
Really? It is showing us still being shared.
Yeah, it's coming.
Okay. Okay, I'm unable to find it, directly here. But yeah, I guess you can easily understand what is happening behind it based on the explanation. So yeah, like this. They gave some image on Google. So suppose someone says fox, this would be the hash. And the moment you make any change here, see, for example, the red fox runs across the ice, this is the hash. The red fox walks across the ice means the hash will be changed. So the moment any kind of modification or any kind of change comes now, the hash code will change. So now what is the advantage of this hash is basically in a blockchain, every block of data has a hash attached to it as the end. This hash has to match with the prefix hash of the next block. If these two do not match, then the chain will not be formed. Message integrity, exactly. I'm trying to reduce the amount of complex jargon. I'm trying to keep it simple, but yes, your terminology is absolutely correct. Integrity of the data will be secured through this. So what we are trying to do, if the end hash of the previous block does not match with the begin hash of the next block, the chain will be broken. So the integrity or the validity of the entire blockchain gets disrupted. So it does not attach only in modified block does not get attached to the blockchain. So if it is everything is appropriate, the new block will be appended at the end of the chain, and then it will be the entire blockchain will be synchronized across all the participants. No matter 1,000 participants are there, everybody will have the same record at that particular point of time. There won't be any difference here. Once all these things are done, then balance will go into the third party's account. Now the thing here is, as auditor, what are we supposed to worry about here? Audit perspective se what are we trying to understand here? I'll tell you in a simple sense, sir. Satyam Computers ka fraud is a classic example for us to investigate. If you have time and if you haven't done it earlier, please take out a couple of hours of your day and research on Satyam Computers fraud. There are multiple phases in the fraud, but the one most important thing that I can share with you all is where Satyam Computers have created fake deposit certificates. Ramalinga Raju garu. So he created fake certificates, fake deposit certificates. Now, auditor is there, balance sheet, they're auditing the balance sheet. They went to the assets portion, they went to current assets portion. They saw this term deposits, non-current assets, fixed deposits. Used it in your class. Thank you. Good. Nice. So this particular case, if you really understand, the Satyam Computers were showing term deposits and fixed deposits in their balance sheet. Auditors are there, sir. They went. So they asked, what is the proof for this fixed deposits? Photoshop is literally available everywhere. 7th standard kids are doing Photoshop. Do you think the company which created the entire technology, geolocation, GPS technology, and integrated the entire ambulance services in India, 108 services, the company which bought, who was it? I believe it was Bill Clinton at that point of time, US president. So he was invited for the opening of Satyam Computers high-tech city branch. So such a huge company, see, no matter how much fraud they did and all, the technological advancements they had at that point of time, they're crazy. With all due respect to their, skill set, I think I should be able to say that, and their picture. They had good platform in their hand. They had great technical advancements at that point of time. They used it for, personal purposes, and ultimately it failed. It's a different story altogether. The fraud part, if we keep it aside, but the technology was well advanced, to be very honest.
Hello.
Anuradha ma'am is sharing a document. I believe it is on Satyam Computers. All right. Anyways, I was trying to talk about this. Now imagine, as an auditor, you are seeing the balance sheet. In the balance sheet, there is fixed deposit and term deposit mentioned. You called up the accountant and you asked, bring me these deposit certificates. Photoshop just change the name of the company and then print it and then give it to the auditors. So auditors will see it, bank logo, bank emblem, everything is there. So deposit amount is matching with the balance sheet amount. Fine. As an auditor, I am happy. Where is the professional skepticism of the auditor? Don't they know that it is very easy to modify a certificate? Don't they know that it is very easy to Photoshop something? They should be aware of that. They should have questioned it much deeper. They should have asked, I want this certificate directly from the banker. Do not give me a printed copy. Ask the banker to send you an email. In the email, put my mail as the CC. I do not want the banker to send you and you forward me. No, forward me, again you can do manipulation. No forwards also. I want the direct confirmation from the banker. If auditors had that, Satyam Computers fraud would not have happened. Maybe even if it was happened, it could have been identified much earlier. The concept was pretty simple. Professional skepticism was not there, and the authenticity of an evidence is completely gone. It's an invalid document that is provided. Inauthentic document is provided. Same thing we are seeing in job market every day. In jobs, people join with fake certificates, fake experiences. Now imagine if these things are put on a blockchain where everything is public keys and private keys are there. A public key is given to the auditor also. Now auditor can go and become a participant on that blockchain. He can access the record. Now banker companies, Satyam Computers, bankers and auditors, all these three are on the same blockchain. Banker will approve a deposit. Auditor will get a notification. Gaya, I do not even need to ask the company for a proof now. I already know it because I am also a participant of that blockchain. There are so many such things that can be easily authenticated by using blockchain. Again, I am not going to go through all these list of things. I put it here, but this I will share as a PDF for all of you, so you can access it later. I'll just share it. I believe here I can share it. Dropbox and all. Okay, it is showing Google Drive and all, but I think I can just drag and drop it here. Nope, I'm unable to share it. Okay, fine. I'll somehow get this PDF file to you all. I'll get it through. But anyways. So I believe I gave you sufficient understanding of how blockchain can help us in the course of audit, and also how it can reduce the workload of auditors. Now, instead of 100 people doing an audit of a multinational corporation, that 100 can be replaced by 30 people. Because what the 70 people were doing earlier, gathering evidences, that can be automated by using blockchain. Share link. Okay, I'll share the file, and then that file will be shared, I believe, because I do not see where I can share. Oh, feedback link. Okay. Already we are talking about feedback. I believe still we have half an hour more.
Sir, you can please continue. That runs parallelly.
Okay, that runs parallelly. All right, cool. Chalo. So we are done with A and B, automation and blockchain, and how auditor also needs to consider them. Next one is cryptocurrencies. Sir, we are all accountants here. We are all accounting faculties here. I believe commerce faculties. Can someone confirm all the faculties are from commerce branch only, right?
Yes, sir.
Yes, all right. Good then. Chalo, I'll have a very simple question. In the books of accounts, cryptocurrencies means a digital currency. It is replacement of fiat currency. It does not have regulatory authorities. They are uncontrolled. They are unregulated. Their value fluctuates a lot. All these things are technical to cryptocurrencies. I have a very simple question specifically for accounting faculties and accounting personnels. What are cryptocurrencies in books of accounts? Like, for example, I am preparing my personal P&L balance sheet. I have, let's say, some holdings in cryptocurrencies. I purchased some Bitcoin, Ethereum, Litecoin, LibreCoin, Dogecoin. I have multiple coins that I have purchased in my portfolio, crypto portfolio. Where should I show them in my balance sheet? Okay, first answer, investment. Okay, I'll keep that. I'll consider that as one answer. Maybe as an investment as current asset. Agreed. What else?
Short-term investments also can be considered, sir.
Okay, basically all answers are current investments, short-term investments. All right. My question is very simple, sir. Cash is considered as a current asset. Bank balance is considered as a current asset. Now, cryptocurrencies. Okay, we are getting interesting answers. Intangible assets. Cool. Okay. Now, cryptocurrencies, we are saying they are replacement for currencies only. We are saying they are also alternative for your traditional fiat currency. Instead of paying money in terms of rupees, dollars and all, we can pay in terms of bitcoins, or we can pay in terms of Ethereum, Polygon, Matic, etc., etc. So now, shouldn't that mean that they are cash and cash equivalents? IAS 7 cash equivalents.
Sir, that's the reason I said short-term investments, which is equal to cash and cash equivalents when we prepare cash flow statement. Short-term marketable securities.
Okay, you mean marketable securities.
Yeah.
Okay, got it. So that would mean liquid assets.
Sir, yes, sir.
Liquid assets. Okay. My question is, can I include crypto balance in my cash balance in the balance sheet? Or should I show them separately?
Sir, as per accounting concepts, means if we do not go according to the rules, as we don't have any regulator body, if we keep that aside, this can be shown as an intangible asset. That too, like cash in hand, we can show, because we can sell and do whatever, because it's like liquid cash only.
Wonderful.
But
if it is legal, okay. Yes, ma'am, go ahead.
But as we don't have any legality in our country, we cannot do that. So we cannot show as per Indian accounting standards. That cannot be shown, sir.
All right. Chalo, we have multiple discussion points here. So let me go into it, sir. Discuss karenge. Some answers have to be shown separately. Some answers about legality of transactions, some showing intangible assets. Honestly speaking, all are correct, all are wrong. Honestly speaking, all answers are right, all answers are wrong. Sir, how can an answer be right and wrong at the same time? Let me talk about it. See, we need to understand something. Cryptocurrencies, there are so many types of cryptocurrencies. Okay. And there are some cryptocurrencies whose value is equal to $1. No matter what happens in the market, their value is always equal to $1. For example, if I show you Tether, Tether, I believe. Yeah. You are able to see this, right? Tether, cryptocurrency. It is currently 81.33 INR, which is exactly equal to $1. All right. So what are we supposed to do with this information? Its value is always equal to $1. So what are we supposed to do with it? Simple. This is considered as cash and cash equivalent. If you go to if you are doing an audit of any client, or if you are preparing the balance sheet of a client who is holding Tether coins in their portfolio, that will be considered as cash and cash equivalent. Why? Because paying attention to the minute details is very, very important as an accountant. I think it is very appropriate for me to say this. Accounting is an art. Accounting is not a science. Art always has its beauty in the finest of details. The other day I was actually talking about this to Anu ma'am where we met in the college. It is very important for an accountant to pay attention to the minute details. That minute detail is there in IAS 7. IAS 7 talks about your statement of cash flows. Sir, if you are not aware of IFRS, it's okay. INDAS also uses the same terminology. INDAS 7. If it is IFRS 7, it would be INDAS 107. But you can go to INDAS 7. It will have the same terminologies. I just want you to pay attention to the definition of cash and cash equivalent. I know I might sound boring at this point, but I have to take that risk. I'll just take 1 extra minute of yours and I'll go to the cash and cash equivalents. And let me show you the definition, sir. Cash and cash equivalents. Mein cash equivalents ka definition dekho. I know all of you think it is short-term, highly liquid assets which can be easily converted into cash. That I know all of you are aware of that, but we do not pay attention to, or we traditionally tend to miss this one important point. Cash equivalents are short-term, highly liquid investments that are readily convertible. Yahan tak we all know, we all teach it. Look at the next word, sir. To known amounts of cash and which are subject to an insignificant risk of change in value. We always skip that. Considered as monetary value. Yes, that is what I'm going to talk about. Look at this wording, sir. Cash equivalents are short-term, highly liquid investments that are readily convertible into cash. We teach that, but we miss out the point that is there beside it that says it can be convertible into known amounts of cash. Exactly kitna aega, and they should be subject to insignificant risk of change in value. Their value should not fluctuate a lot. Their value fluctuation should be restricted. Then only we can say they are cash equivalents. That is why, my dear fellow faculty members, we never say investment in equity shares, investment in bonds. These are considered as investments. Even though, sir, if I'm holding Reliance shares are there with me. Aren't they highly liquid investments? I can go to the stock market tomorrow morning when it opens and I can sell them. What is crypto wallet? What type of account it is? Okay, let me just finish this discussion. I'll come back to this. Minimum change in conversion. So Reliance ka example, I am holding Reliance shares. Aren't they highly liquid? I can go to the NSE or BSE tomorrow morning using my stockbroker, maybe Zerodha or Upstocks or anything, whatever account it is, and I can sell my investments. It hardly takes me 1 minute to sell my investments in Reliance. And they readily convertible into cash? Yes, they can easily be converted into cash on any trading day. Then why aren't they called cash equivalents? Why am I showing them as current investments? Because they are subject to significant risk of change in value. Today's Reliance share price might not be equal to tomorrow's share price. Their value is significantly changing every day. Because of those fluctuations, they cannot be considered cash and cash equivalents as per this definition. That is why accounts is an art, sir. We have to pay attention to the minutest of the details. That is why cryptocurrencies also cannot be considered as cash and cash equivalents here, because they are always subject to significant risk in their value change. Sir, but you just showed us Tether coin. Tether, it does not change in value. It is fixed with the dollar. Yes, my dear friends, in that case, it is cash and cash equivalents as per IAS 7. If an investment is in Tether, it should be included in the cash and cash equivalents balance. But if that investment is in Bitcoin, I cannot include in cash and cash equivalent because its value keeps fluctuating. Definition will not be satisfied. I believe I'm making sense. Or am I just confusing?
No, sir, it's very clear. It has been very clearly explained.
Thank you. All right. So the next point. Okay. So some coins are cash and cash equivalents where they are fixed. Their value does not change much. Then cash and cash equivalent. What if they are changing? Can I consider them as investments? It depends on what? It depends on the purpose for what you have actually purchased those investments. Unfortunately, again, investments come under IFRS 9. So again, I'll have to go to IFRS 9, which is financial instruments. So if I go to IFRS 9 financial instruments, I'm going directly to IFRS website. I'm not going to any other, this normal modified ones or manipulated ones or anything like that. These are original. Directly, I'm going to IFRS website and logging in with my credentials. So if I go to IFRS 9, go to the standard directly here. All right. So again, if I go to the definitions, financial assets ka definition, class recognition, derecognition, directly it is there. Where are financial assets definition? Okay, here you can see. Not this. Cash, right to receive from another party, contractual right where you have a beneficial terms. Like there are some definitions of that. Okay, fine. I have it on my slide, so let me just directly go to that. Okay, so look at the first part, sir. IAS 7 defines cryptocurrencies Cash and cash equivalents are short-term, highly liquid, insignificant changes because cryptos are subject to changes in their values. They cannot be considered cash and cash equivalent. Next question would be IFRS 9 financial instruments. Again, they cannot be classified as investments because they do not satisfy the definition given in IFRS 9, sir. What is that, sir? You can see it does not represent cash. They are not cash unless tether coins, stable coins, which is a different story. They are not equity shares of another company. There is no contract or any right or obligation in terms of any cryptocurrencies. There is no agreement in cryptocurrencies. So if you see really very carefully, if you see cash, our currency note has a word on that. I promise to pay the bearer of this note a sum equal to this much money. You all observed that on your currency notes, 100, 500, any note. I promise to pay the bearer of this instrument, and then there will be RBI governor signature on that. Means there is a promise, there is a contract. That is why they are financial instruments. But cryptocurrencies, no such promises are there. There are no such contracts. If it is not a contract, it cannot be a financial instrument. If it is not a financial instrument, it cannot be an investment. IFRS 9 financial instruments, investments is also gone, eliminated. So what is left is intangible asset. Cryptos do not have any tangible existence on them. So they are intangible assets. But it depends on your purpose for which you are holding that investment, sir. We have to be paying much attention to that. All right. So on this particular thing, if you have further doubts or regarding accounting for cryptocurrencies, I have made a complete video on that. I'm sharing the link in the chat section. You can copy it down on your device, whatever, however it works. Maybe I put that link in the chat section, and it is there in the PDF also. Here on the top, you will see this link section on the right side top. So that would be accessible for all. You can click on that. The YouTube link will be there. So this entire discussion on cryptocurrencies, whether they are monetary, non-monetary, cryptos are investments or intangibles, what is the accounting treatment for that? Again, how is the fair value determined? Everything I have explained in that video. So again, we have limited hours, so I cannot go into the details of all the topics here. So it becomes difficult. Now, sir, as an auditor, from auditor's perspective, how are these things going to impact us? Now, I touched based on some topics in this slide, but another so many complications are there. Some topics, if you see, existence. Oh, okay. Before that, I believe I have some doubts to answer in the chat section. So let me just go back. Is cryptocurrency considered as monetary value? No, it cannot be considered as monetary asset because it does not satisfy the condition of significant changes in risk value. That is not there. So it is not a monetary asset as per IAS 21. Next, what is crypto wallet? What type of account? Crypto wallet is basically, I'll explain it to you in a simple manner. Suppose if you go to Zerodha is one stockbroker. So you can upload your Aadhaar, your PAN and all that stuff, and they'll create a demat account for you, dematerialized account for you. So they'll also give you a depository account. So depository account is where all your shares are saved. Similarly, if you also open another account with Upstocks, they'll create another depository account for you. If you open another account with, let's say, 5 Pies, they'll open another account, Paytm, another account. So same person can have accounts in different brokers. Same person can have accounts in different banks. I can have SBI, ICICI, Kotak and 10 other banks. Similarly, crypto wallets are where you save your cryptocurrencies. Like you are saving your money in a bank, fiat currency you are saving in a bank. Your share market investments you are holding in a depository account. Your cryptocurrencies, you will hold it in a crypto wallet. So you can create unlimited number of crypto wallets. There is no restriction. Let's say, suppose if I'm using Coinbase, I can create a wallet over there. If I use CoinSwitch, that's another wallet. Maybe I can use Binance, that will be another another wallet. Wallet is where you save your cryptocurrencies, like a bank account. Minimum change in conversion. Yes. All topics. Okay. Is it legal? Can we hold cryptocurrencies? Technically, in India, it is not illegal as such. There is no restriction on holding cryptocurrencies, but the restriction is on using cryptocurrencies as a mode of payment. Suppose I purchase a land from someone and I say that I'll transfer you the money in terms of cryptocurrencies. I'll transfer you Bitcoins. That is not allowed. Can I buy and sell them? Yes, absolutely. I can buy and sell, no problem. Can I hold them? Absolutely, yes, no problem. I cannot use it as a medium of transfer. It cannot be considered as a barter system. That is illegal. I believe I answered all the doubts and hocus pocus around cryptocurrencies, I believe. Thank you. Chalo. So moving ahead. Now, audit of cryptos. So in cryptos, there is a lot of nonsense. Just now we spoke about wallets. Now, suppose if I have an Aadhaar card, I can search based on my Aadhaar card how many accounts I am having. Similarly, I believe you are aware of this AIS, Annual Information Statement. Now in income tax, you can, based on your Aadhaar and PAN, all your transactions are already reported to income tax, including your credit card bill payment. Income tax already tracks it, but they will never be able to track cryptocurrencies. Sir, why? Because they are highly confidential and I do not need to give Aadhaar, PAN or anything for creating a crypto wallet. The biggest problem with crypto wallet is, since crypto wallets are that since they are not regulated, no one knows who is the holder of any particular currency. Sir, I can, like, say for example, I have a crypto wallet. I deposited 10 Bitcoins into that and I transferred my key to somebody else. Just the private key, as simple as just giving them a password through darknet. Yes, maybe I can use a Tor browser or whatever it is. Again, let's not go into the details of it, but I can just transfer my private key to somebody else. Entire money is transferred to them. There is no record. There is no IMPS, no RTGS, no NEFT or anything like that. Absolutely zero history, zero track record. Just I will share a private key and gone. Entire money is transferred to them. Similarly, wallet address will be there. Crypto wallets, like you have bank account number, every crypto wallet also has a number, crypto wallet account number or whatever you want to call it. Wallet address, yes. So you can see crypto wallet address, numbers and all. There will be one public key. Public key is basically like you can share it with anyone. They can transfer money to you. They cannot take money away from you with the public key. But if you give private key, gone. It's like your email account. With the public mail address, if you give your mail address, they can send you emails. They cannot send emails from your address. But if you give them private key, it is like giving your email password. They can log in and they can send emails to anyone. They can transfer that money to anybody. So it's as simple as that. Private key and public key are pretty much self-explanatory, I believe now. Public key you can give to anyone. They can transfer money. Private key you should not give to anyone, like that. So this thing is, now as an auditor, for God's sake, I cannot say, does this person really have 5 Bitcoins with him or not? There is no proof for that because there is no centralized authority. There is no proof. There is no bank statement. There is no balance certificate. There is no way I can gather an evidence from them. I have problem with audit. Similarly, rights and obligations. There are no obligations or there are no rights. Like a contract is not there in cryptos. That is what we saw with FTX. I believe you have heard about this FTX crash that is happening right now. The billionaire has become a beggar kind of a thing. So this is the biggest thing that is happening right now, sir. 22 hours ago, 2 hours ago, 1 day ago. It's very recently happening, and we can see the very bad fall in crypto markets. I believe you are all aware of it. Bitcoin has dropped from $63,000 to $14,000, $15,000 over the last 1 year. You can see from, in Indian rupees, if I see it dropped somewhere from 35.5 lakhs to currently 13 lakhs, 35 to 13, almost all 70% of its value has been lost. 60-70% value is gone over the last 6 months from March 31st till today. If you see in the last 6 months, it has gone 61%. From Jan 1st. Over the last 6 months, 41% loss is there. But again, if you see 5 years, we are still 40% gains are there, because their major gains started during lockdown only 2019, 2020, that phase only the actual boom in crypto started. So before that, it was very less. Anyways, so you can see all this part. Let me just go ahead. So valuation, how do we value cryptocurrencies? It's all a big hocus pocus. There is no stability involved in it. So their value keeps fluctuating like crazy. Like if you see stock market, there are something called circuit breakers. So if a stock goes 5% or 10% in a single day, trading halts in that. You cannot buy or sell them. They are called circuit filters, upper circuit, lower circuit. The moment a stock increases 10%, trading will halt for certain period of time. Again, it will resume. Again, if it is hitting up another upper circuit, trading will be halted for a period, for a day usually. After 2 or 3 circuit breakers, trading will be halted for that day. But such kind of circuits are not there in cryptos. I can show you easily in one day, in 1 hour, cryptos can go 30%, 40% also. There are so many situations where it happened. In a couple of minutes, 30-40% changes will be there in crypto values. So again, that is a big problem for us. So like this, cryptos now, because of their volatility and because of their unregulated nature, it is very difficult as an auditor to verify the accuracy of that. So the last part, that is data analytics. So this is not really a huge topic for us to understand. Basically, data analytics is what? Presenting the data in a more systematic manner so that information can be easily obtained rather than trying to look for values. You have them readily available. It's as simple as that. Instead of writing 10,000 paragraphs or 1 lakh Excel records, you put it as a simple graph so that you can click on something and you get to know the details of it. Unfortunately, I'm logged into my personal account, I believe. Yeah, I'm logged into my personal account on this laptop. In my office account, I would have showed you Power BI dashboards that I usually work on. At the time of introduction, ma'am has said that I work as a finance controller for a US group of companies. So we do this data analytics, revenue analysis, which customers are lagging on their payments, what is our periodical revenue growth rates, from which sector we are having more growth, which sector we are having less growth, who is our most valued customer, like that, which customer we are spending more time in terms of software support and all. We prepare certain dashboards. Power BI is the tool that we use. In case anyone is interested, Microsoft provides you free, completely free Power BI. Power BI desktop is there. So you can download this for 100% free of charge, no credit card, nothing. All you need to do is go to powerbi.microsoft.com, click on download free. That's all. You can install this and you can prepare this kind of dashboards that you are seeing on your screen. These are very, very powerful dashboards. I believe this makes complete sense to you. The one that I'm playing right now, a video this is. So look at this. This is much more easier for a user to analyze than, going through list and sheets and sheets of never-ending data. This makes it very easy for a user. See, on the top, you are having summary of product-wise sales, all that stuff. There is AI also involved in it. You can use question and answer models. And these are all highly interactive. Interactive as in, if I click on something, the entire dashboard will be changed based on that. See, they're showing you something here on this video. We use all this most of the time, but we do not paint it like this. This images and all we'll not use, but yeah, most of it we are. So you can click on something and the entire dashboard will automatically change to show that. All right, so yeah. So as an auditor, how are these dashboards and all Power data analytics going to help us is, it will give you first, if you remember in the first slide I discussed with you, first step as an auditor is to understand the entity, its industry positioning, its industry maturity and all that stuff. So to know that, don't you think you need to look at their past record? And that past record, instead of showing in numbers, if you show in these graphs and all, it makes much more sense. So it's important for the data auditors to use data analytics. And you can see here, I have added this. Usually in traditional audit, we use first objectives and scope are fixed. Then we'll develop and enhance the scope. We'll create an audit strategy, audit plan. Then we'll go into the field work. We'll start our audit. Then we will check for all the evidences and all that stuff. Then we will finally issue an audit report. Usual traditional approach. But with the advent of data analytics, the steps have increased. First, you have to do a potential analytics. What is the revenue growth rate? What is the cost to say contribution margin ratio? Is it increasing or decreasing? If contribution margin is decreasing, it is showing inefficiency in their cost calculations. Like for example, company is there, sales are increasing, GP is decreasing. Doesn't make sense. Sales are increasing, gross profit is falling down. That means they are unable to manage their direct costs, or you can say variable costs basically, or product cost or whatever. It depends upon again the costing technique that they're using, marginal absorption or ABC. So yeah, not completely overheads, but yeah, direct expenses, the direct costs, cost of goods sold is increasing a lot. So that can be identified by the auditor by using data analytics. We can see past plus predicted future, and we can say, okay, this is what is happening. These are critical areas. Why are the salaries increased by double suddenly in a single year? So that could be a red flag for the auditor. You can say, you can question the director, sir, why did the salaries suddenly double in 1 year? They'll say, sir, we started a new project. For that, we hired new employees. So here is the proof for that. So a red flag can be identified easily by looking at the data. That is the purpose of data analytics. You can extract the information from different systems, transform it to make it look appropriately. What are the relevant information? You can take that. Irrelevant information you can filter out. Then load it into a data analytics software. Then use analysis, comparisons, visualizations, charts, graphs, and all. Brainstorm with your audit team. Develop your audit plan and strategy after doing data analytics. Now, this will enhance the quality of the overall audit by 10 folds. So rather than you planning out something without having the information behind it, if you plan an audit after considering your entire data analytics, after you know the track record of the client, after you know what they have been doing for the last 5-10 years, then if you start your audit planning, it will be much more effective. Isn't that why we conduct entrance test for our students before they join the college? Instead of taking them blindly and then trying to train them, what we do, we first conduct a evaluation test so that we know where they are lagging or what they are doing, where they need to focus. Are they fit for this particular curriculum or not? Or should they be doing this other course, or should they be doing this course? We can guide them appropriately by doing an interview and by evaluating their efficiency levels. Similarly, in an audit also, how much time more do you require? Just 1 more minute, ma'am. I'm done. This is the last slide, I believe. After that, I have just one video link to share for COVID part. That's all. So if we do data analytics and then if we start our audit, it would be much more appropriate and efficient. That's all. That's I wanted to confirm. So due to COVID, what happened? The biggest concern of COVID is going concern. Most of the companies are shutting down due to COVID. So again, this is a little bit outdated because now we are in 2022. COVID has gone in 2019, 20, 21. So everything is back to almost all back to normal now. So a lot of challenges due to COVID are not really present as of now. But the biggest problem is going concern. Specifically, if you see airline companies, most of them faced issues with their going concern. So auditors has to consider that as an additional activity. So again, I believe that's the last slide. Yeah, that's the last slide. So in case anyone is interested to connect with me, you can connect on LinkedIn and you can drop any queries that you have or anything like that. So I am more than happy to come, connect with you all and share resources and knowledge. So that's my presentation for today, guys.
Yes, sir, that was a marathon presentation. I should really appreciate for the efforts that you have put in making us go from the traditional auditing set of mind to what are the present challenges of auditing.
Thank you.
So I am also just waiting for any participants to raise up queries.
Yes.
We have a very resourceful person here who is maybe ready enough to answer any type of query pertaining to accounts,
Hopefully.
auditing, field of commerce and industry.
I'm trying to upload this
Good evening,
file.
sir.
Yes, ma'am. Go ahead.
Sir, as you mentioned that about cryptocurrency, that it can be shown as intangible asset. But when we don't have legality, how auditor is going to accept it as intangible asset, and
We do
how?
have legality in India. There is nothing like it is illegal or
But
anything.
we don't have any regulatory body to have control on that.
All right.
So how it can be considered as shown as intangible assets in the balance sheet or the final
Perfect.
statements whatever
Okay.
we prepare?
Wonderful, ma'am. Good question. So let me answer it very easily. Accounts and law are completely different subjects. First point. See, if suppose a client has gotten some money through illegal business activity, that money has been deposited into the bank account. Does that mean we do not record it in the books of accounts?
We record.
We have to record it. We have to show
Yes.
it an income. We have to pay income tax on that. And then we have to talk about legality in separate act. For example, money has been obtained through money laundering activities, some kind of bribe or something. Still, it is a receipt. It should be recorded in the books of accounts. Then whatever legal course of action is there, that has to be taken up by the respective authorities. Similarly, cryptocurrencies, if suppose here in India, it is not illegal to hold them. First of all, you can hold them. There is no restriction. So if they are holding it, there is no problem. Imagine if it is illegal. Still, you should show it in the balance sheet and then report it to the respective authority. They will take the respective action, whatever is the course of action.
Yeah, can I just add a point over here, sir?
Yeah, ma'am.
I
sure.
think last year there was a discussion in the Supreme Court which recognized that cryptocurrency can be traded in India.
Yeah,
So
it
it
is.
makes it very legal. Maybe we don't have a regulatory authority, but
Yeah.
since it is recognized, I agree with you that it should be shown in the financial statement once you are trading with the cryptocurrency.
Correct.
Yeah.
So I mean, whether it is legal or illegal,
Yeah.
we have to always show it, because the fact is that a transaction, if it happened, it has to be reported in the
Yes.
balance sheets, in the P&L. Whether
Yes.
it is legal, illegal, or whatever it is, that has to be taken up with the respective authorities.
And it is to do with the auditor.
Yeah. Again, it depends on the country's rules and regulations. Confidentiality, auditor will sign on a confidentiality agreement. So he should not disclose it to everyone. There are only certain legal authorities to whom we can disclose.
Yes, sir. I think there is one more question waiting for you from
If crypto is
Mrs.
not
Bharti.
recognized, won't it
If
affect
the crypto is not
inflation and
recognized, won't it affect the inflation and pose the challenges for auditing?
Right. So if crypto is not recognized, as in, if in a country, if in an economy, if the cryptocurrencies are not recognized, then inflation and challenges would be there. Again, crypto is not really the solution for replacing fiat currency. As of now, no, because regulatory authorities, without regulatory authorities, when these kind of things are happening, like we have seen with FTX recently, we have seen with Binance. So these crashes are bound to happen. Crypto is in a very early phases. So it will take some more time, I believe, at least a couple of years, maybe 5-10 years. So before it can it can get the potential to replace your fiat currencies. Till then, good luck with cryptos, as simple as that. See, even I am one of those poor investors who lost money in cryptos, though it's not a big amount. It's considerably small amount. I was trying to explore cryptocurrencies, so just put some money. Initially, when I invested, I had like 30-40% gains. It was amazing returns. And then I ignored that. I left them like that. And then now it is around 60-70% of loss. So these things keep happening in cryptos. They fluctuate a lot. You never know when the next boom happens, and suddenly Bitcoin today it is 13,000, 14,000, and suddenly it goes to 50,000 in a couple of days. So it's very highly volatile as of now. So it is very immature. It will take some more time for cryptos to start stabilizing, and before it gets accepted as a mode of transfer of values.
Yes.
Transaction, it will take some more time.
Yeah. Any further questions from the participants?
I shared the PDF file of the today's presentation.
So you have been very
Drive.
patient enough in sailing us through understanding so many technical terms. And particularly auditing is considered one of the traditional subjects like accountancy. You have created disruption. You have introduced so many new concepts of technology into this, and you have made it very adaptable as per the present needs of the industry and commerce. And it sounds very interesting. Maybe you have put in a seed of curiosity and interest among all the participants here, sir. Thank you for your very informative and your patient time in addressing all our questions and sailing us through. Thank you, sir, on behalf of St. Anne's College, Medipatnam, and St. Pius College Management and faculty. We thank you so much, sir.
Thank you, ma'am. It's my pleasure. It's my pleasure.
Thank you all the participants for a wonderful staying back throughout these 2 hours of hectic time and the busy time that we are in.
True.
So tomorrow we will be meeting again, same time at 5. Tomorrow would be the last day of FDP. So I request all the participants, if there are no further queries, with a big thanks to sir, we will end the session for the day and rejoin back tomorrow at 5 p.m.
Ma'am, if I may, people are asking for feedback link, I believe.
Sir, that we will manage, sir. No,
all right. So I shared the links and everything in the chat section. If anyone wants the presentation PDF, they can download it from there. Google.
Yes. I think more than the feedback links and all, if you can have your contact details and you make yourself more approachable, you will have many calls from the faculty.
Sure, ma'am. But contact is something that I believe.
It is fine, sir. It is just because we get requests. I would just.
I mean, I'll be available on LinkedIn, Sai Manikanta Pedamallu. So it is there in the last sheet of the presentation.
Yes,
if at all, I think I can share it here also. Yeah, I'm sharing my LinkedIn profile and I'll be more than happy to connect.
Thank you so much, sir.
Thank you, ma'am. Thank you. Thank you, guys. It's been a pleasure and it's wonderful connecting with you all. Hope I'll get to see you all soon someday.
Thank you, sir.
Thank you, ma'am.
Thank you, all the participants. Now you can leave the meeting.